point that we are making here, Adam Smith, in his very first book in economics, 1776, gave us two guiding principles, and the first one was a good tax system is designed on the basis of an appropriate set of rules. And the second one is the system has to strike a balance between the interests of the taxpayer and the tax authorities. And of course, he had his canons of taxation, and the first of these was that every individual should pay depending on the individual's ability to pay, which he interpreted was that higher income individuals should pay more because without the protection of government, they would not have earned and enjoyed their higher incomes. But he also said that taxes ought to be proportionate to income and did not basically embrace the idea of a highly progressive tax system. His second was the canon of certainty, and we already heard that addressed, and I would certainly like to emphasize it as Adam Smith did, and that is tax a person should pay should not be arbitrary. In other words, there should be a rational basis for that tax. And of course, the taxpayer should know in advance how much they're going to have to pay, what time the tax is to be paid, and the form in which the tax is to be paid. But also the canon of certainty said the government should be certain of the amount it's going to collect from the tax. So both the taxpayer and the government need to have a high level of certainty. The canon of convenience, and that he said the method and timing of the tax payment should be convenient for the taxpayer. It should be based on income. It should be paid at the time the income is earned. This, of course, is translated into withholding. If based on sales, it should be at the time the transaction takes place. And if it is based on wealth, whether it's a gift tax, an inheritance tax, or a property tax, it should be paid at the time of the transfer. And of course, the property tax, unless you are having your taxes withheld as part of your mortgage payment, does not correspond to that canon of convenience at all when you're paying it in one or two lumps each year. The canon of economy. The cost of collection should be low compared to the tax collected, and a lot of our smaller nuisance taxes in this state clearly fail that criteria. It's much better to have fewer, broader-based taxes than to have a large plethora of many taxes that are hard and difficult to collect. Tax collection should be efficient, taking no more from the taxpayer than what is necessary to defray the cost of providing services. And the corollary to that was the amount collected should cover the full cost of providing government services. Adam Smith did not accept the idea of deficit financing. He felt very strongly that government should be run on the pay-as-you-go system. And of course, we are fortunate, in my opinion, in this state to have a balanced budget amendment. And I'm not going to generalize that to a larger level of government because that's beyond what I've been asked to talk about today, but I think you can get my feelings on that. The additional principles of taxation that have been developed over the years, and I've listed some of the organizations that have come up with elaborations on these, the National Center for State Legislatures, and I think that, Mr. Chairman, you've distributed that or will be distributing their criteria. The Certified Public Accountants have one, the National Tax Association, an organization on which I serve on their governing board, the International Association of Assessing Officers, and then, of course, the two tax commissions that we're here to talk about. And not surprising to us, but maybe surprising to you, would be to know that both of these tax commissions, composed basically of different people, reached the same conclusions about what the principles of taxation ought to be and that we ought to follow. The first of these is efficiency, and that was put number one and not arbitrarily, and that is an efficient tax system encourages economic growth and job creation. I can't stress that too much, that while taxes may not be the most important factor, if you take out the consideration of location and quality of labor force and maybe other factors like the availability of raw materials, then taxes do become a significant determinant of where firms locate. So it may not be the first, but if everything else is equal, it does play a major role, and the better research confirms that. This tax system should be competitive with other states, so it does not encourage resources to flow to other jurisdictions, a question we need to ask ourselves all the time. Taxes should be neutral, and that means they should not favor one business or individual over the expense of another business or individual. Because quite often our taxes, when we give a tax cut to one group of people or to one business, the slack has to be picked up by another business. And that would be a violation of that principle. Secondly, equality of fairness. Similarly situated taxpayers should be taxed similarly. And that means that an equitable tax system has a minimal impact on low-income taxpayers. And we will talk about that in just a moment, recognizing the fact that West Virginia is a low-income state, which limits our ability to tax as much and to meet all of the demands that you all face as legislatures every legislative session, when the long line of folks shows up at your door saying, give us this tax break or start this new program or expanding the existing program that will be of benefit to us. A fair tax system uses a balance of tax sources related to different concepts of ability to pay. There's not just one concept, although some people may try to convince you otherwise, and that is current income is the basis for the income tax. Wealth is the basis for the property tax and estate and gift taxes, at least at the federal level. And consumption is the basis for sales and for value-added taxes. So we should not assume that there is only one way to measure fairness of a tax system or equality of burden, because it differs from depending on the type of tax. And you heard Mark Mucco mention this morning that so far as progressivity is concerned, that may be a question better left at the federal level than certainly at the state level. Revenue adequacy, this is important. And I notice again, as I've repeated it, you've got to have a stable yield. That is an important. There are many states now that are highly reliant on mineral taxes. And I'm thinking of two in particular right now, Oklahoma and Alaska, which are really struggling with the problems of the decline in prices for the mineral resources that they are severing. And we are going to be experiencing that same effect over the next few years here in this state. A state's tax system should be sufficient to balance the state budget, to meet the needs of the state's highest priorities, which means as a legislature it's necessary to say these are the things that are most important, these are the things that we're going to fund first, and the budget needs to be balanced. Administrative costs should be as low as possible, and those taxes with the greatest difference between revenue and collection costs are to be preferred. And we still have several taxes which I classify as nuisance taxes, where tax collections are extremely high compared to the amount of revenue that is brought in. The tax base should be diversified with taxes collected from a variety of sources. And in that sense, we are fortunate that we have personal corporate income taxes. We also have property taxes, sales taxes, and of course severance taxes. So we are not stuck with just one source of income for the state, and that is something of which we can be proud. Simplicity and accountability. The easier it is for a tax structure to be understood, the highest will lead to the highest voluntary compliance and the lowest enforcement costs. I would be willing to say that the vast, overwhelming majority of what Senator Osho-Crago used to call the people who live in little white houses don't have a clue about how their taxes are done. And if you take a look particularly at taxes on business, this is a mystery to most people as well. So transparency is very important. And again, simple taxes are to be advocated over more complex ones. And the system of credits and the system of exemptions that we have, particularly for business taxes, have made that certainly not a simple or understandable tax. Changes in taxes should be infrequent, as stability is essential for planning both by taxpayers and by the government. You heard Mike Morton mention this a little bit earlier. One of my professors, Jim Buchanan, who won a Nobel Prize in economics a few years back, said that there ought to be what he called a tax constitution, in which it should be, once you had a good tax system in place, that it should take supermajorities to change that. Because he said any tax system works if the people who are going to pay those taxes, and particularly businesses who are thinking about moving into your state, they want to know that the rug is not going to be yanked out, there's not going to be new taxes imposed on them, or benefits that they have received are going to disappear. That's an extremely important factor when you're talking about economic development, particularly with foreign firms, and I'm thinking of the Italian firms where they're fleeing that country in droves because of the changes that have been made with the radical change in government that is there, that is basically taken the whole business tax structure there and redone it entirely.
I'm an attorney with the Bowles-Rice Law Firm, but more importantly, I've had the privilege and honor of serving with Dr. Kent as co-vice chair of the Underwood Commission on Fair Taxation, and I certainly thank you for the opportunity to discuss it in some depth, both the plan and what I call the amendment. Now, I need to explain this slide. This was really a footnote. I know there was an amendment written because I wrote it, but my research, I was unable to confirm that it was actually fell into the legislative hopper, the joint resolution. And there's two possible explanations for that. One is that I'm just getting old and forgetful, and it didn't happen, but I thought it had. Or that the other possibility is that some politicians may have lied to me. But with that clarification, I'll move into the materials. We applied, the Underwood Commission applied these widely recognized standards to the West Virginia tax structure as it existed in 1997 and 98, and we made the following findings. First of all, it was too regressive. A couple of prime examples: the income tax was hammering the low-income working poor. More structurally, the property tax has a horribly regressive situation where if you can afford to own your own home, you pay half as much of the rate per $1,000 as you do if you have to rent property and pay the landlord's class 3 or 4 rate, which is twice as much as the owner-occupied rate. We found that there were too many separate, narrowly focused taxes, that there were too many exemptions and exceptions. In 1985, when I began service as state tax commissioner, there were about 24 exemptions from the sales tax. Today, there are more than 6, and part of that is because, as Mark Muco explained, West Virginia has a residual approach to taxing services. If it's not expressly exempted, it's taxed. It's default to a tax situation. Therefore, you have a like I say, more than 6 exemptions, and most of those are in the service area. We found that the structure was not adaptable to the state's evolving economy. We hoped the economy would evolve. We anticipated that it would, and of course, that is happening, and I see it in my county, where we, thanks to many of these arrangements that Mark Morton referred to, we have a huge Macy's distribution facility, and we're now getting a huge, even larger Procter & Gamble manufacturing facility. So our state economy is evolving. We found that the existing structure lacked sufficient revenue generating capacity for local government, very centralized, as Mark Muco explained. We found that the structure lacked fair and equitable tax dispute review procedures, both for state taxes and property tax. And we found that we needed a funding means for public education that was fair and stable, but at the same time provided a competitive property tax structure. Because the fairness was the central mandate of our commission, we expressly recognized the need for fairness in the context of certain relationships, and that is fairness among taxpayers. That would be in the recognizing the principle of neutrality and ability to pay, fairness to all taxpayers as a class, equal and uniform, and simplicity. I mean, it's unfair to taxpayers to burden them with complex, unfathomable tax structures. And fairness to the government, because that's the people's institution for the collection of these taxes and the expenditure on the public's needs. And we found, of course, that the overall fairness was required a balancing of these fairness among these different relationships. So we adopted 6 goals to address these findings and to implement or achieve the balance of fairness that I mentioned. First of all, we called for a simple, broad-based, low-rate tax system with fewer taxes and limited preferences. I don't know if anyone remembers the tree tax. It was fortunately a briefly lived experiment, and this is a classic example of that we had too many taxes. This was one too many for sure. Just to raise, maybe low 6-figure money for pay raises for some forestry employees, forestry division employees. We put a tax on all the trees in West Virginia, and in a bizarre thing, partly through the property tax. And it was going to cost more to administer it in Kanawha County than it would yield statewide. So, but that's an example of what not to do, and we did see the light after a few months, I think, but it did pass the legislature. We called for and certainly at the same time, fewer taxes, fewer exemptions and credits. We called for a less regressive system, a more stable system that responds to the evolving economy of the state. We called for providing local government with more revenue generating capacity and flexibility, some choices. We called for providing more independence and objectivity in the procedures for review of state and local tax disputes. That's something that John Mayers and Louis Southworth and some of us really see every day and recognize as a deficiency in the system we had. And of course, we need to provide for stable public education funding, but at the same time, to the extent it uses the property tax, we need a competitive property tax system. So to achieve those goals and the balance, we adopted a plan, and at least I drafted a constitutional amendment which would have done the following things. First of all, it called for the immediate repeal of the property tax on licensed motor vehicles. Of course, we were not unaware of the political appeal of that. And then we called for the phase out of the personal property tax on all other tangible personal property. The amendment would require the legislature to fully fund the regular school levy to the thorough and efficient standard in the Constitution, while preserving the real property tax base for education funding for future local excess levies. Third, we reallocated the entire regular real property tax levy authority to the counties and municipalities. In other words, to make up for the loss of the tangible personal property part that those levying bodies look to. Fourth, we require the legislature to make the counties and municipalities whole if that was necessary to avoid a revenue shortfall from the loss of the current personal property revenue. Was not intended to be speculative about what they might lose if they kept it in place and more cars came in and all that. It was a fixed threshold of relief, and actually we did learn that in some counties, some of the southern coal counties, the tangible personal property tax base is so large that it exceeded the real estate tax base. So that type of a relief and a fallback and make them whole we felt needed to be in the Constitution. We did preserve the real property tax base for the payment of existing bond levies. I know all the bond lawyers would be concerned if we didn't do that, and required the legislature to underwrite, full faith and credit time, any actual shortfall in a local bond levy revenue. That's of existing. We repealed, phased out, or replaced all existing state taxes except the severance tax, the property tax on real property and utility property, the property transfer tax, the gasoline excise tax, and various sin taxes, and the estate tax. 7, we authorized the legislature to replace the eliminated taxes with, first of all, a new progressive income tax that had 2 rate levels, 2 brackets, 5% and 6%, a new business activity and profits tax that had a 2% rate, a new general excise tax that had a 6% rate like our current sales tax, a new electric power generation tax, and a new retaliatory-only insurance premiums tax. I can explain what that means if someone cares at the end of my remarks. 8, we authorized the legislature to provide exemptions from the personal income tax for low-income elderly and disabled persons. In other words, a means-tested exemption or relief for low-income elderly and disabled people. Now, the business activity and profits tax base would consist of the following elements. There we go, it's even bigger. Retained current profits, dividends, interest, rents, and royalties paid, compensation and benefits paid to employees, depreciation on new assets, less a deduction in the year of purchase for the full cost of depreciable capital assets. In other words, it's just the reverse of the income tax structure where you don't get any deduction for making the purchase other than the investment tax credit and that type of thing. And then you deduct and get a write-off as you use the asset. This was just the opposite. You write it off when you buy it, and then you add the counting depreciation to your tax base as you use it. And that the stimulus effect of that ought to be pretty apparent even to we non-economists. Then with regard to the general excise tax, mostly to prevent or avoid pyramiding of that can happen with that tax if you're taxing business inputs, we required that the only exemptions from the general excise tax be isolated sales, yard sales in other words, sales among related businesses, employee compensation and benefits, purchases for resale for direct use in manufacturing, agriculture, production, and natural resource production, for use by government agencies and by charities for free distribution to the public, for government services and goods not competing with private business, a parking lot, city parking lot, would be have to charge the tax if there's private lots in competition with it, for instance. And we allowed the legislature in this constitutional amendment to also exempt sales of advertising and healthcare services and medicine and appliances. Then this number 11 is maybe the most creative. I don't want to say radical, creative. This amendment required that if there was, the legislature has full authority, plenary authority to raise the rates if more revenue is needed, or to lower the rates if we have surpluses and don't have uses for the new money. But if the rate of any of the four of these taxes, that's the progressive income tax, general excise tax, the business activity and profits tax, or the severance tax, were raised, then it'd have to be accompanied by a proportional increase or decrease, as the case may be, in the rate of the other three taxes of the four. The fiscal discipline that this would impose, we think, would be significant. Number 12, we, as Mark Morton indicated, as the tradition in this state, it was about preserving the economic benefit of previously earned credits. There was a time before Mark, I think, actually finished law school when we didn't do that. The old industrial expansion credit, and we changed the tax that it applied to, but since then we've learned our lesson, and so the constitutional amendment would require the preservation of the economic benefit of any previously earned credits, exemptions, exceptions, discounts, as long as you can measure them. But it otherwise repealed all such tax relief measures in our code prospectively, and only allowed them to be reinstated or new ones established upon a 2/3 vote of each house of the legislature. 13, we heard in Mark's listing of taxes or tax-like fees. It was quite a long list. This amendment would prohibit the imposition of any new government fees that are measured by a percent or a rate, and only allow new fees to be based on a fixed monetary amount per transaction, per license, whatever. And finally, we permitted the legislature to empower counties and municipalities to impose the same taxes that the legislature would be allowed to impose, including a piggyback on the general excise tax, which is, we've taken a step in that kind of direction with the municipal sales tax. That's the same concept. In terms of the implementation, now we didn't get to implement much of anything, and even though I wrote that amendment, that was the end of that. But there's been plenty of good work, and Dr. Kent will describe a fair amount of it that came out of the Mansion Tax Modernization Program. But just to give a scorecard for how the Underwood Fair Taxation Plan has done in terms of any implementation, I'd have to say it's partial, piecemeal, of a few of the goals. We have repealed or reduced some of the taxes and credits. Certainly the business franchise tax is now gone. The corporate net income tax rate has been reduced significantly. The telecommunications tax, the corporate charter tax, the estate tax have been repealed and are in the dustbin of history, I believe and hope. We also provide, since then, there's been low-income tax relief provided in a number of provisions. And then in some of the other areas, we did establish through a 30-year effort on the part of many of us, the mostly independent West Virginia Office of Tax Appeals to provide some independence in the review of state tax disputes. We got a little bit of property tax appeals reform in the terms of the time frame that you have to put together your case to challenge a valuation question. And there has been, as has been mentioned before, some limited home rule for municipalities, but none for counties so far. The goals of simplicity, consistency, fairness among taxpayers have been undermined, or we've taken a few steps backwards by adding some special exemptions and credits. I'm not an economist like Mark Muco, so I can't provide any projections or anything based on economic theory, but as a lawyer, I can count pages. And where in 1991, for instance, is not that far back, we had the West Virginia tax code consisted of one volume in the Green Book, of exactly 900 pages. Today, there are 2 volumes, and it consists of 1,629 pages, not counting the pocket parts. So simplicity is not something we can say we have achieved. But probably more importantly, I believe that the goals of stable and efficient tax system, responsive to today's evolving economy, certainly of a competitive property tax system, and a broad local government flexibility, and most importantly, neutrality and fairness among and to taxpayers has remained largely, if not completely, unaddressed. Final thoughts on the Fair Taxation Commission. It clearly, at this point, is simply food for your thought. And there are more than one way to skin the tax reform cat. But I do believe that it offers a vision of a tax structure that would be simpler, more efficient, more competitive, more stable as a revenue source, more flexible for local government, disciplined by that constitutional linkage of the rates of major taxes, and most importantly, blessed through the constitutional amendment as being fair by a vote of the people. A couple other thoughts. There is long-standing precedent for the business activity and profits tax in New Hampshire's business enterprise tax. And that is a state without an income tax on compensation paid to employees or as a result of a liberal deduction for earned income on the owners of most pass-through businesses. The Fair Taxation Commission's plan was revenue neutral. The goal was not to change the amount of tax raised in a total way, to create a structure to raise or lower it. And it included modeling to show that its impact on various industries. I have one further thought, that, or actually 2, that aren't in your materials. And Mark Muco will discuss this in far greater detail this afternoon, I believe. But the 1985 B&O repeal was the last legislatively driven major tax reform to be implemented in West Virginia. Keep in mind that it left still a large portion of our state general fund revenue, the source of it, gross receipts taxes. It simply took, for instance, the B&O tax on natural resource production and labeled it the severance tax. So we still had a large gross receipts base as for better or worse. That's up to others. And secondly, I would point out that the shrinking of the B&O tax base that reform called for was financed in large part, on paper anyway, by the adoption of the business franchise tax and the increase in the corporate net from, I think it was at 6 or 7% at the time, to 9.75%. It's taken us 30 years to fix that reform, that part of that reform. We've just now brought the rate of corporate net down and gotten rid of the business franchise tax. And the final observation I have, because Mark Morton did a wonderful job, nobody knows those credits better than he does, but to me, the credits, the pilots, and this is my stock and trade, is how I make a living, knowing about them, but they really are an indictment of the basic structure. They say, when we have to do all that, they say that the basic system does not encourage investment. So my point is that reform needs to happen, I do believe, but go about it carefully. There's two ways to have caution and conservatism. One is a dry run, side by side, is what was done when the B&O repeal. The results of 2 years showed that it wouldn't raise enough revenue. And secondly, phase in, as the legislature has done with the phase in based on fiscal milestones like the corporate income tax rate reduction. Those are means to the end of conservative tax reform. I very much appreciate this chance to be with you and look forward to helping any way I can in the future.